Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally the NFP is over and we saw gold shooting up right after NFP. Gold made a high of 2004, but we saw immediate correction. Gold again came down. Surprisingly, it took support around 1990 and ultimately closed at 1992. So this is the chart of gold USD in front of us. And if you look at the news, you can see stocks jump, dollar and yields drop after US job market softens. Global stock indexes rose sharply. The US dollar dropped to a 6-week low and benchmark 10-year US Treasury yields fell to 5-week lows on Friday after data showed US job growth slowed more than expected in October. So this was the outcome of NFP, and this is the chart of DXY US dollar index. Probably you have heard me saying a lot of times in my previous videos of Euro USD and GBP USD. I have discussed about DXY, that DXY was in a range for a long time, and finally we saw DXY breaking the range and ultimately closing at 105.06. Monday or the next week will be very important for DXY, because if DXY climbs again, it will be inside the range again. But there's a high chance that DXY will face some resistance around 105.50. 105.50, if you remember, then this was the previous support. So the previous support will be the new resistance on the chart of DXY. DXY closed at 105.06. After the market opening, if market starts falling, if DXY continues the downside or continues the selling, then obviously, okay, we will see further downside on the chart of DXY. But on the other hand, if you see that DXY is going up, then DXY will face some resistance around 105.50, the previous support here. I don't want to discuss any longer because the correlation between DXY and gold is no longer, right now is not valid. Okay, so maybe it will be back after a couple of days and weeks, but as of now, if you are a trader of gold, if you're a lover of the yellow metal, you solely need to focus on this chart only. Okay, but still, it is very important as a forex trader to know what is going on in the chart of US dollar. Okay, so now let's talk about gold then. So the range of gold is still the same here. Yes, there was upside on the chart of gold, but still market is still the resistance of 2008 to 2010 is still very much valid. The red box is still very much valid. It's still untouched. So 2008 to 2010 is still the resistance for the market, and the support of 1960 to 1963 is still the same. So the range is not gone. The range is still the same here on the chart of gold here. In case market drops sharply by next week, 1960-63 will come for the rescue as support, and if gold starts going up, then obviously 2010 will be acting as the resistance. The range is still the same here. So if you are a swing trader, if you are a positional trader, you can look for a sell around this level, you can look for a buy around this level. Because if you look at the chart of gold carefully, then we can still see a sideways market. Okay. This market is not trending. Yes, gold was trending, but if we look at the present trend of the market here, we can clearly see that gold market is choppy. Gold market is trading inside a range. So in this type of market situation, as a swing trader, you can easily go for buy at support and sell at resistance. But if you are a day trader, okay, if you are a day trader, then obviously you cannot wait for this level, you cannot wait for this level, because nobody knows, okay, when the market will hit this level or this level. So you need to trade on this particular portion of the market here. So let's discuss one by one. So the market opening here also, it will be very important. As I said, the market took support around 1990, the previous support, and market bounce. So right after the market opening, if you see gold coming down, then your first support will be around 1885 to 1887, and second support will be around, sorry, not 1885, it's 1985. Okay, 1985 to 1987. again, 1985 to 1987. Mentally, I'm still around 1800 level. So 1885, 1985 to 1987 is the first support, and the second support is around 1982. These are the two support levels where as a day trader you can look for a bounce. Usually we don't get to see much volatility on the first half of Monday. If market acts like a typical Monday market, we can expect some support around this area. If you're wondering why we can expect, let me show you. See, I have used Fibo here. More or less you can see market has respected Fibo very well. So around 1987 to 1985 we have Fibo 50% retracement level, previous support. Along with that we also have dynamic support around this area. So usually on Monday there is not much volume in the first half, so you can definitely expect the buyers around this area will provide support to the market, and if market bounces according to expectation we can go for a buy. The second support is around 1982 because we have Fibo 61.8% retracement level, and third support is around 1978 to 1976. I don't think so we need to discuss about 1978 to 1976 right now, because uh, for the market to come down to this level, market will have to break these two levels first. Okay, so at first let's concentrate on these two levels only, 1985-87 and 1982. So these are the two levels where you can expect a bounce of at least 40 pips. Okay, my favorite, 40 pips. And if you're wondering about resistance, then yes, the 2008 to 2010 resistance is still very much valid on the chart, but we also have a new resistance around 2002 to 2004. So during the day, if you see gold going up, you can also look for some selling opportunity around these level. If we draw Fibo from here, okay, if we draw Fibo from here, you can also see the market has respected Fibo as well. But to be honest, trading on these Fibo levels can be a little bit riskier. So as a result, I don't want to discuss it. But if you're an experienced trader, if you have been trading for quite some time, and if you have good risk management skills, then you can also look for selling opportunities around these two areas. But keep in mind, these are for scalpers only, experienced scalpers only, where 1996.50 to 9 and 1998.50. These are the two levels where as a scalper you can look for some selling opportunity, but as a beginner don't try to trade around these levels because you may get trapped. Okay, so if you're a beginner, then try to stick to the major levels of the market, which is looking for a sell position around 2002 to 2004 and 2008 to 2010 as of now. And if you look at the forexfactory.com economic calendar, we can see that there is no major news coming up on Monday. So as a result, we can expect that more or less the present market sentiment will continue. Okay, so in this market situation, we can look for trading opportunities around these areas. So if I repeat, then if you're a swing trader, position trader, then obviously you need to stick to the major levels of the market, because you'll be riding the swings, because your trades will last for a couple of days. So you need to focus on the major levels, that is 2008 2010. If market reverses, you can go for a sell, whether you're positional trader, swing trader, or day trader. And if market drops, we can look for buy around 1962 1963. Okay, but if you're a day trader, then obviously you cannot sit, okay, ideally looking for positions all around those levels. We need to focus on this particular portion of the market here. Market opening will be important. If market drops right after the market opening, you can look for some buy around 1985 87 and 1982. These are the two support levels. Okay. If market takes support and bounces, you can go for a buy of 35 to 40 pips. Similarly, if market goes up, you can look for some selling around 2002 to 2004 level as well, because the high made by the market yesterday will also act as new resistance. Clear? And if you're a scalper, if you have a good experience in the market, then you can also look for some risky scalping opportunity around 1996.50 1998.50. How much you can expect? 20 to 30 pips, not more than that, because this is a risky scalping opportunity. And And if you're a beginner, don't try to take trades around these two areas, because there is a chance of getting trapped. Okay, so see, single chart, but there are many opportunities, but not all the opportunities are for us. Okay, some are for day traders, some are for beginners, some are for experienced traders. So you need to select, okay, according to your trading style. Do not try to snatch the scalping opportunity. Do not try to become a day trader, scalper, swing trader all at once. Okay, you'll be messed up. Anyways, my dear friends, this is my analysis. Okay, so please be careful and please do your own analysis as well. Okay. And my dear friends, if you're looking for a better broker, if you're not happy with your current broker, if looking for a good spread and no slippage at the time of news, you can consider joining GTC. GTC is a regulated broker, and the best part is that there is no slippage at the time of news. And if you open your account through this link here, the broker will reward you with 1:2000 leverage. So it's a huge leverage. If you're looking for big leverage, then yes, GTC can be the solution for you, because it's regulated, no slippage, and yes, 1:2000 leverage. Okay, so that's all from my side, my dear friends. Have fun, enjoy the weekend. Bye bye, take care.